For more on these high earnings is Andrew Lipow. He's the president of Lipow Oil Associates. Good to see you, sir. I don't think it's controversial. Prices are high. Oil companies make money. What's the issue?
Well, good evening. Thanks for having me. The issue is that the oil companies are making so much money, and many people think it's unfair that ultimately the consumer is paying the price in the form of higher gasoline and diesel fuel prices.
Right. So I suppose one solution is to bring down prices, and that was part of that meeting today, which they agreed to, I think, 100,000 more barrels, which everyone said, well, wasn't enough. And I saw that oil prices bounced down today. I was very perplexed by the market reaction to all this, because you would think if they're not producing enough, then why would oil prices go down? So I was trying to figure this all out, and I couldn't. So you're going to help us.
Sure. Well, actually, two things happened. Early this morning, OPEC did announce the 100,000 barrel a day increase, which I, including the rest of the market, view as not having any impact at all, because OPEC Plus is already missing its current production quotas by 2.8 million barrels a day. But a few hours later, the EIA inventory statistics came out, and they showed that commercial stocks of crude oil and gasoline built when the market was expecting especially a draw on gasoline inventories, and we saw gasoline demand deteriorate quite a bit, such that this year compared to last year, demand for gasoline is now down about 7%. And it's gasoline that led the market lower, especially as we head into the home stretch of the summer driving season.
Aha, so that leads to my point, because 4 months ago when oil prices spiked up, we talked about most consumers, more than 50% of drivers in the U.S. said they will drive less as a way to save money. And now we're finally seeing that what we call demand destruction, right, for our economic friends. Is that what this is? I mean, people, it sounds like we're using less oil, which means we're driving less?
Well, that's exactly what's happening. As the consumer got sticker shock when they filled up their SUVs and trucks and saw $100 on their credit card bills, they decided they had to do something. So we see many consumers, they're combining their local errands. We see more carpooling. We see more people working from home during the week. Not all the time, but corporations are much more comfortable with people working from home, especially with high gasoline prices. And in addition, during the summer driving vacation season, people are simply taking shorter trips. And all of this is combining to reduce the demand for gasoline and keep inventories at a pretty much steady level.
Right, and then we also have, this is on the back of interest rates being racked up because we want to slow the country down or slow the economy down, which we're already seeing right now. I know a lot of people who have cut back, not just on driving, but on everything because of inflation. So this is going to tie into that. If oil prices are pulling back, does that mean the Fed is successful in slowing the economy down and therefore won't have to increase rates as much?
Well, they're going to be partially successful with a strengthening dollar, but I think the jury is still out on how much inflation is going to ultimately decline. Certainly, it's good news that gasoline and diesel prices are coming off, but we've yet to see the full impact of, say, higher natural gas prices on electricity prices or for the upcoming home heating season during the winter time, and that's going to really stress the consumers. They pay higher utility bills. Rent prices continue to go up, and as far as I observe, food prices continue to go up at the local grocery stores.
Andrew, congratulations. I was trying to keep this positive, but you bring up a very, very good point in that we keep talking about oil, 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 and that's really for the driving and refining. But the nat gas is used to heat homes come wintertime, which let's say starts in November sometime. Right? That's when Europe's going to get going. That's when we're going to get going, at least in the Northern Hemisphere. And we don't have any projections of whether or not we're going to face a shortage yet. I mean, this has not been decided yet, right?
Well, I don't think we're going to have a shortage here in the United States, as we're a major exporter of natural gas. But now that we are connected to the rest of the market, we could see prices rise. The biggest concern is what's happening in Europe, where their natural gas prices are 7 to 8 times that here in the US, you see industrial customers cutting back. My greatest fear is that this causes a recession in Europe that spreads to other parts of the world, including the US.
Right, and it's for us too, we will pay higher heating bills all across the Northeast and throughout the country. Andrew, I could talk about this for a long time, but we won't. We're going to leave it there. Always good to see you, my friend.
Thanks for having me.